Hey guys, John Henry here. What an interesting day today on crude oil. There's so much going on, and from the standpoint of market psychology, we've got a lot of bases to cover. So let's jump right in here. Yesterday, we ended the day out with a wedge going into the end of the day, and that wedge towards the end of the day, the bulls really tried to get that bull breakout at the end. You can see how aggressively they shot price higher, and if you look, arguably they closed outside of the wedge highs, but, is that good enough so that people know, they obviously closed outside. It's not obvious. And that's where the issue comes in, because a lot of buyers aren't necessarily going to want to hedge their bets on a candle like that isn't too obvious. And then we open up today with a slight gap up, and it turns immediately down to the bear side. That doesn't look good for a bullish breakout of the wedge. And then we get a little tiny inside bar right here, inside that prior candle. Very bullish, right? Barely any wick on the top, barely any wick on the bottom. As soon as that candle opened up, they bought it right back up. Now, a lot of buyers are going to sit on the sidelines for this kind of candle, because is that candle big enough to take back that entire bear move? Not really, right? Not really. It's not very convincing until we put it in context, right? This candle broke back inside, obviously, above those, or from the top side of that wedge. And then the very next candle very obviously closed outside of it. So we're seeing that shift where this might be a breakout attempt, a pullback, and then the buyers pick it right back up. And we get a massive bull engulfing candle that engulfs the entirety of that little inside bar right there, as well as trapping below that big bear candle. So that would trick in some sellers and immediately fire right back up. Now, any sellers that got in that move, they hate everything about that candle right there, and they're going to look to exit above. And that is a perfect place to look to enter long and ride that move back up. So a beautiful move higher to start the morning out on a breakout of the wedge in a pullback, with a lot of sellers getting stopped out driving that move up. We then pull back, and a lot of times, if they didn't take this one right here, they're going to wait for a more obvious pullback, and that might have been this one if it would have gone a little further. We can see they really tried to get that move down. Any bull move was quickly shut down on very strong bearishness, but as soon as they came back to fill that gap on yesterday's close, it immediately spiked higher. Now, the first bounce after that big of a move down, there aren't going to be a lot of buyers that are that interested yet, right? They're going to be interested because we're bouncing in an area after the bulls have already proven it, but we might just fade a little bit lower. The bears might take back over and see that as better pricing. So it's not a good enough reason to get in yet. Then we get an attempt from the sellers to try to take it lower, and at all but failed, right? They got it to close bearish, but that's about all they got out of it. With a huge wick on the bottom, they couldn't even close below the moving average. Everything on the planet saying that the sellers are failing, and we turn around right into a bull conviction candle. It did have a decent amount of wick on the top, but in the context, we can see the sellers failing, and that is a beautiful place to hop in and ride that move back up for a continuation. Now, we're looking for a 1-2 leg right there, so an AB equals CD measured move up, and beautiful conviction to the upside. Now, we did have some news that came out at 10:30 from OPEC, and that OPEC news shoved the market higher. Massive upside momentum. And we can see after that type of move, we go a little bit sideways. It's not that much of a surprise. Well, that candle was, but the follow through isn't much of a surprise because everyone's just trying to get everything back in order. Whoa, where do we go after something like that? Are we going to buy? Are we going to sell? And we just kind of fade in the middle into a little range. Now, this is where it gets even more interesting because the bull massive news candle followed up with another bullish candle. And yes, there is a lot of wick on the highs, but when a candle is this size, the wick doesn't necessarily matter. The fact that they closed aggressively bullish after a huge move up like that means that the buyers are still interested. We go into a small near doji in the middle. The sellers try taking over by selling it down, and they quickly fail right back up on a very weak bear candle, and that is a beautiful sign to begin buying in. Now, if that wasn't good enough, right, the sellers try again, and they fail almost worse, right? This was just a huge doji. This one looks like the failure that we had back here, and a lot of people are going to pick up on that thinking, man, the sellers tried and they failed there. They tried and they failed there. Any sellers who are in this, if it goes above that candle, they don't want anything to do with it and they're going to exit. And we break above it. We start seeing some mass exodus from the sellers, and we close directly on the top of that candle. And that, my friends, is another beautiful setup to ride that move back up. Gorgeous, gorgeous breakout movement here on crude oil. Even with the OPEC in the mix, all the fundamentals and all the news, as long as you're reading the market psychology in combination with technical analysis, whatever the news does, it falls right in line with what price action is supposed to do and what market psychology would see happen. So beautiful movement, phenomenal examples. Hopefully you learned something from it. Hopefully you found it enjoyable, and we'll see you next time.